Good afternoon, everybody. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Here is the position disclosure. I picked up some KRE today that I'm keeping overnight, and I picked up a little bit of Airbnb in between the market closed and when we started this meeting. I was trading back and forth a little bit on some pretty small size off this earnings report, which I think that the Airbnb report looks decent. Guidance is like kind of in line or a little bit light, but it seems like it's they guided Q2 revenues and 2.35 to 2.45 billion versus expectations of 2.43 billion. So just a little bit narrow on the range in regards to expectations, but everything else looks pretty good. And they announced a $2.5 billion buyback. I'm surprised it's trading as weak as it is, but you got some daily support down here is what kind of got me involved in it. Get some daily support down around that 113 area, and I guess the measured move is about $11, which also corresponds to this like 113 to 115 area based on where the stock closed. So I want to see if this area can hold in Airbnb as I'm involved in it. Hope the internet holds in well for this afternoon meeting. Actually, I don't think it's the internet. I think it's my computer. Did a lot of work with the tech team after hours yesterday. Looks like it's so far so good. Yeah, so I'm broadcasting on YouTube. All right, well, if it's really no good, then I'll have to end the meeting and maybe Pat can jump in, but Pat didn't get any heads up on that. So I'm, like I said, I'm having a real computer issue. I got to get a new computer when I come back to New York. Usually the YouTube broadcast, which Pat just posted the link for, has clearer chart visuals than the virtual trading floor. So if the virtual trading floor charts are not looking great to you, I would encourage you to check out the YouTube, where hopefully it's a little bit better. Anyway, let me keep an eye on this Airbnb. We got a couple other interesting. Oh, Rivian just came out. What's that Rivian doing? Rivian trading flat here, at least initially. Rivian numbers are... Jeez, this company loses so much money, it's mind-blowing. Absolutely mind-blowing. The firm's fiscal year 23 adjusted EBITDA of negative 4.3 billion. Oh my god. Every time Rivian reports, my mind is blown about how it's even possible that this is able to be a company. It's really sick. Oxy just came out. Let's take a look at that. Oxy misses on EPS. Stock's trading down on it here initially. And Q1 oil and gas pre-tax income is a mix. Thanks, Eddie. Upstart's the real surprise here after hours. Upstart up 31% after hours. Another company that just looks atrocious, to be honest. But they beat on revenue, and they only lost 47 cents a share when estimates were 82 cents a share. So I guess that justifies a 31% rally here after hours. Pretty sick. Yeah, I would think so too, Nick, with Upstart, but that loss was much less than expected. It's only up 33% right now. What's up, Judy? Airbnb is still trying to hold that 114 area. All right, let me try not to be distracted. Let me try to do an afternoon meeting. So how do we close today? SPYs are negative 0.37%. The Qs are down 0.66%. The IWM is down 0.14%. So we had some pretty good relative strength come into the Russell after a concerning open for the Russell. I guess let's start with the chart of the SPYs. So what was the expectation from today's trading session? The expectation that we established in the morning meeting was to not really have much of an expectation, right? The day before the CPI, the market had a great snapback rally from like a failed breakdown on Friday. Yesterday was a rest of that strong snapback rally from Friday, inside day. I said ideally in the morning meeting today that the market holds yesterday's low. That did not happen with the SPY. We traded below yesterday's low. We closed right around yesterday's low. But, and I apologize if my voice sounds a little bit off on top of everything else. I got a little bit of a head cold. I think Pat posted a statistic at one point in the VTF and in the close. I don't remember exactly what it was, but it was the tightest intraday range for the SPY or for the S&P going back to November 2021. Was that correct? So that was our expectation. In the morning meeting today, I said, let's not get too excited. Let's not put too much risk on. We could focus on some of these names in play, and most of them kind of turned out to be duds too, to be totally honest with you. And I think that the market's going to be waiting for the CPI tomorrow. So that was it. We had a extremely tight range day that was within the midpoint or so of this broader consolidation that we've been in. Levels, especially going into tomorrow. And hey, Pat, if you're here, do you have an implied move on the CPI tomorrow? If you got that, I'd love to see that information. What the market's pricing in for the SPYs and the Qs, if you could do that. But yeah, anyway, midpoint of a range here, day before the CPI, very low expectations from the market, and those very low expectations were perfectly met. Just a super tight trading session. One of the most important themes in successful trading is knowing when not to trade. And that's a big part of my morning research and my morning meeting every day. Thanks, Pat. So the CPI moves are starting to get more muted now. Also, what the market's been pricing in, it's been narrowing a little bit each month now. It looks like $3.70 is nothing compared to what we were pricing in at the end of last year, last October and stuff. I think we were pricing in like $10 plus moves, if I remember correctly. But anyway, like I was saying, the market was just really tight and sloppy, and knowing when not to trade is a huge part about the business. And a big part of my research every day is I'm assessing the big picture technicals, I'm assessing how the market's gapping, I'm trying to come up with a game plan for myself for the day, and part of that game plan just includes how aggressive does today call for? Do I have reason to think that the market could break out? Do I have reason to think that the market could be a trend day, right? Big thing that you want to establish is there a higher probability of today being a trend day or a range day? Trend days happen much less often statistically, but they are also much better as far as reward potential. There's a lot more reward potential that can come from a trend day than from a range day, but they happen less often. So we want to try to look for the clues that can figure out, all right, today is a day to be more aggressive. Those clues could be a major news event, a major macro event, like potentially the CPI. It could be technically based, right? We understand that markets work in periods of expansion and consolidation over time. So if you just had a big period of expansion, then most likely you're going to be running into a period of consolidation. That made sense yesterday, right? Friday was a big expansion day. It was one of the bigger up days that was of the year on a percentage basis. The next day then, becomes a little bit of a range day. So you could have, news-based reasons, fundamental reasons, technical reasons for range days to come in. Breakouts could be, a reason for the market to squeeze higher, and that could create some opportunity. But coming into today, again, small gap down on the market, midpoint of a big picture range that we're in for the SPYs, the Qs, the IWM, and a big number tomorrow. So today it made sense to have low expectations. And if you had low expectations, if you sat on your hands, which I primarily did a little bit of trading early on today. I did not do anything with massive risk, and it was totally the move. As far as my own trading went, I continued to manage positions I'm in. I took one early type trade in plug that didn't work out, but my risk was super tight, and I was able to get a strong enough of a bounce off of it to be able to make a few bucks in it early on in the day. It was pretty much right off the open. We identified 840 as an important level. The market traded down through. There it is. Here's my chart. My charts are loading very slow, so my internet's or my computer's a problem right now. they sold this plug off very hard off the open through 840. And the second bar here, you can't even see it. In a low of $8.37, then traded back through that 840. So I bought back through the level for literally 4 cents worth of risk. The low of the day is 837. I got my low at 830. I'm gonna stop at 836. Looking for a snapback, ideally to the ADMA, some sort of bigger bounce. I got to move, only up to 56 cents. Luckily, I was able to sell some to cover my risk, and I actually got filled at that high. I sold some on the offer at 56 cents, which was nice. So then I got pushed out of this trade. It was a very small risk trade. I did not go with a ton of tier size, considering I only had 4 cents worth of risk. This is by no means an A+ style trade. Just seeing if I can make a little bit of cash flow for myself, and then I got out of the way, and I was done with it. KRE, I got a little bit more focused on today. I've spoken about it in the past a bunch recently. The individual regional banks scare me. I don't like the individual stock risk of you potentially being involved in the next SVB or FRC, and one day they just halt it and they never reopen it, and you lose 6 figures on a position that you were risking, thought you were risking $1,000 or $2,000 in. We won't say who that happened to. So I like the idea, if I want to be involved in regionals, to focus on the ETF, so that I've got, they're probably not going to halt KRE and open at 0, which could happen with an individual stock. What I really wanted to see, and what really got me focused, is this daily chart. So we had a few trading sessions ago when they really wrecked those regionals, and that WAL came out with that news that then they refuted was actually not accurate, that they were looking for a sale and had an advisor, and it was actually something the Financial Times posted, and the company came out and said it was unequivocally not true. That gave us this really high volume doji day with extension. There was a nice day plus gap up snapback on that into the ADMA. Weak stock, or weak sector in this case, that's now below support, gets extension and bounces back to the ADMA, or the space between the 8 and 21 EMA, which is the space that I broadly consider to be technical equilibrium for any stock or market. This is exactly where this should pivot down technically, and it did. And they sold this thing off all day yesterday, and they closed it at lows. And then this morning it was really weak. They gapped it down along with the market. It was very weak early on. But I was watching this thing here, and if you want to attempt to have any bull case at all, technically for regional banks, which is impossible almost to be able to do because of how terrible the ETF looks, and even fundamentally it's pretty difficult to have a real bullish thesis on this thing, unless you just think it's just a little bit overdone at this point and there's not going to be any more bankruptcies, in which case you'd be disagreeing with like a Warren Buffett and some really smart people that are out there. But if there's going to give any technical improvement to this KRE at all, you need a technical higher low to come in. So when I was looking at this thing trading down and kind of filling this gap area from a couple of days ago and coming into this like 36.60 area down in here, I started to trade it a bit. I think the first trade I took was like a break-even trade, or even a little bit of a loss, actually. I don't think I got the fill that I was looking for. So I think it was a loss. I went back to that well, which you got to be a little bit careful. You don't want to be fighting a stock. And I started to build in again a little bit when I kind of put this doji in. And then the trade that I really called out to everyone was this inside 5 and up. And that inside 5 and up corresponded with some bullish option flow that was coming from Pat. We saw a couple things hit in a row that were $40 sweeps into the market on a decent amount of size. And that, coupled with this inside 5 and up, started to create this trade. And I think I even called it out where I was like, technically this is actually a bearish setup, which it is. It's downtrend continuation on an inside 5 and down. But what I said was, I actually kind of like this to the long side if it's able to break up. A little bit of extension to the downside there. The spot in the daily chart where I would want to see a higher low come in. Look, this is by no means an easy trade. This is a very hard trade, actually. This is usually not, I don't think that trading has to be difficult. I'm a big believer in the saying, keep it simple, stupid. You don't have to have overly complex strategies. You don't have to fight trends. You don't need to go after hard money. And I'll be honest, this was kind of hard money, but I went after it. I don't want to say it was a boredom trade, even though maybe that had a little bit to do with it, because boredom trades are really not something we should be doing with the market. I don't want to set a bad example. But I actually was looking at that daily chart and thinking, all right, maybe we could get a higher low. The bullish option flow is starting to hit. If this inside 5 comes in and breaks up, maybe we can get a move back up to 37. If I can get a move back up to 37, I'll be in a win-win situation where I'll be making money in this thing no matter what. I can have a stop in at lows, and then I'll just see what it does. And that's exactly what I did. I traded it pretty actively in this area. I got this pop. I unloaded stock in the 36.80s, 90s, and just above 37 into this pop. And I did nothing in it the entire rest of the day. I left my stop in at lows, and I was like, all right, let me see what it can do. It wasn't looking great, honestly. Market wasn't doing anything. IWM wasn't doing anything. And then out of nowhere, in the early afternoon, 1:30 or so, 1:40, this thing actually broke up and it started dragging up the IWM with it, which is exactly what you want to see if you're bullish in this market. I keep emphasizing it. It's so important that we can attempt to get some participation from the Russell. And we just have not been able to get it. It's been staying relatively weak. This Russell can't recapture the key levels we need it to. And part of the reason why it can't do that is because this KRE, regional banks, mid cap, small caps, have really remained so weak and have weighed on it. So if we want broader market participation, we need the IWM to improve. If we want the IWM to improve, we need the KRE to improve. I'm not necessarily coming out here with a strong bullish thesis on the regional banks. I honestly don't know. I'm a much bigger believer right now in JP Morgan and Bank of America and the big banks, which I'm involved in. There's no doubt in my mind that the big banks become significantly bigger and stronger, and that JP Morgan purchase of FRC was a complete and utter total steal. That's going to add on $500 million of I don't know if it's revenue or profit or whatever the heck they were saying. But it's just a massive win for JP Morgan, especially to be able to get them for pennies on the dollar at a receivership, which is something that we have discussed in the past. But still, caught that little rally in the early afternoon for KRE. It sold off a little bit into the close, as did the market, which I don't love. I ideally would have wanted a 27.50 or a better close in order to keep it, but I decided to keep a small position. And that was pretty much it. Google was showing that relative strength on that news. This is like one of the more interesting ones, I think, of the day. Otherwise, it's a pretty boring day. Really interesting that Google went from the strongest name to very much not the strongest name as far as big tech today. Extremely strong off the open. Had that AI news hit after hours yesterday. Caught a big pop on it. Pre-market this morning, the entire market's gapping down. At one point, Google was the only thing I could find that was not an earnings name that was green on the day. And they ripped it off the open. Big move. And it was a big technical breakout, too. We've been looking at this 107.50 to 108.50 as a technical breakout zone for quite some time. I tried to narrow that down in the morning meeting to 107.50 for a trade. They opened it up a good bit above that. Again, the upper part of that resistance range is 108.50. So they got news. They got great opening volume. The volume's consistent. There's a sick momentum move here early on. Gets all the way up to 110. And then, okay, fine, weakens out a little bit with the market. This is not that big of a deal, giving a 15-minute chart style, correction as long as it holds. Even if it just wanted to continue to go sideways beneath 110 the rest of the day, that would have been fine. But the fact that they then just sold this back down to red and broke this opening low is really kind of gross. And if you go back over to the daily chart, it just leaves you with this upside topping tail and a potential failed breakout in Google, which is no good. It's not what you want to see. Whereas Amazon, which had no news around it at all, was the other one that I identified pre-market, was trying to be relatively strong. It was like upticking to green, and then coming back down with the market. So Amazon, we've been looking at 106 for continuation for a while. And I didn't really trade Amazon aggressively today because I didn't feel like the market was on my side, and the market's one of our key layers of probability that we want to be paying attention to. But this Amazon ended up trading really well. It cleared that 106 area, and it honestly spent the entire afternoon doing what I wish Google did. Going sideways. Just showing some relative strength, being green on the day, digesting the move, staying above the 106 level, going sideways, and actually closing pretty decently, especially because the market itself sold off. So Amazon is one that we'll be able to continue to pay attention to here with a little bit more resistance on some of these recent highs around 110 or so. So we'll see how that plays out. And that was pretty much it. Paul G, great job with Palantir. Just to give you a shout out again. We were looking at Palantir in the $9 area when you have these really big gap ups. We spent a lot of time talking about this recently, so I won't get into too much detail. Usually you want to be patient for the first 15-30 minutes on these really big gap ups and let the gap extension satisfy itself to some degree. Usually this is not what you want to see, is this heavy selling off the open. It's not the end of the world because it's happening off of extension. And I was a little bit concerned about Palantir in general because I thought that missing on guidance was a problem. I didn't really understand the degree of strength in the stock based on the report, which maybe got in my head a little bit, so I wasn't involved. I know one of you guys mentioned that they mentioned artificial intelligence somewhere in it, and maybe that, helped the stock. But Paul, great job again, just, being patient. Stock sells off, it starts going sideways, you're letting this ADMA catch up. You identified how tight it got right here in front of this like 890, right as the ADMA was catching up to lows. When you usually get continuation on these types of charts, when the ADMA catches up to price. So it was textbook in that regard. Real tight inside 5, ADMA catches up to lows, you get continuation. I'm pretty sure that's when you bought. I'm not sure if you bought at 9 or you cheated on 9 a little bit, which honestly would have been fine if you bought, $8.90, something like that, and then gave great continuation. So that was probably one of the trades of the day, if anybody else was involved in it with Paul. So really good stuff. I think that's all I got. So we have the CPI tomorrow. Pat told us what the market is pricing in. I already forget what he said. I think he said $3.70. Just scrolling up trying to find it. There it is. Yeah, about $3.70 is what we're pricing in for the CPI tomorrow. So market is expecting a little bit more of a muted reaction compared to what we've seen in some of the previous reactions, especially at the end of last year. But it'll be an interesting one. I think that these inflation numbers are of particular importance right now as we're looking at the Fed pausing. You really need the inflation numbers to stay steady and continue to decline while the economy is still holding up on the bull side of things. So we'll see. Really hard for the Fed to cut rates or even leave rates as is if all of a sudden we start seeing a big uptick in inflation, which is not what I'm expecting. I'm expecting it to still continue to come down, but we'll see tomorrow at 8:30. So that's all I got. I'm happy to answer any questions that you guys have. All right. Scrolling up in the VTF here. For Medi, the VIX is not pushing below 17 today. I'm not sure where the VIX closed. The VIX one day sharply rose from 9.3 to 18.3 today too. I have a bad feeling tomorrow a bad CPI can push us above 20 again. I mean, sure, if there's a bad CPI, the market's going to sell off and the VIX is going to go up. The opposite could be true too. The market's up in this really big range, like we were talking about in the morning meeting. And you just need to know your key levels in the range and be ready to get out of the way on your longs if we really start breaking below that 404, 405. And the opposite's true if we can really start clearing above like 416 in the SPYs, 4200 in the SPX, which is such a key level right now of resistance on the tighter range that we've been in for a month and a half and the bigger range that we've been in for a year at this point. And there are really interesting positioning arguments and fundamental arguments that you can make on both sides of the market right now on which way we should break. And I don't want to come in and have too strong of an opinion while we're within the range. I want the market to tell me what it thinks. But I want to be prepared that if we start losing 404, 405, that Mike Wilson, Marko Kolanovic bear case could actually begin to play out and the market could start, de-risking and selling off dramatically through those points. But the opposite's also true. I think I saw something this morning that hedge funds right now are more net short than any point that they've been in since 2011. And maybe they're right, some people consider them to be the smart money. But if they're wrong and this market really starts clearing 416 and things are looking a little bit better big picture, you could have some big time fireworks to the upside. So I don't want to be overly opinionated on how this is going to break. I just want to know those levels, and I want to be ready for when they actually do break. From Mike, Amazon looks like it is setting up for a short-term breakout as well as how Google set up. Gap fill at 109.50, and then I see you providing the chart for Amazon here. Nice. Yeah, I mean, the storyline, this Amazon sell-off has been pretty interesting. You know, we're looking at a stock that was up at $190, worked its way down to $80. Obviously, everyone understands this company pretty well, and everything was probably a little bit bubble-ish back here in 2011. But it's a big sell-off for this type of company, and it started to work its way back higher. You know, along with the market, you've got this major higher low that's come in, and we need to see if these stocks can clear above some of those more recent highs. So you've got that earnings move in Amazon that brought it to this high of about 114 or so back in February on that report. And you know, you have some gap fill resistance around this 110 that goes back to November. This was one of the weaker names on the most recent earnings season that we're still in right now compared to the other mega cap tech stocks, compared to Meta, compared to Microsoft. And this thing traded up to, I'm trying to remember. I remember trading it at like 118. I think it made its way to like 120 after hours on that earnings report. And then they sold it all the way back down on the conference call when they said some things about AWS that the market didn't like, that were more guidance-based. But if you actually look at that recent report, there's a reason why they ripped it up to 120 initially. And again, you know, AWS, lower guidance, not good. Makes sense that they sold it back down. But it was actually a stellar report. Stellar report. All right. What else, guys? Anybody else have anything for today? It was a slow day, so happy to potentially do a shorter meeting today. Also checking over to YouTube if it'll work on my computer right now to see if I'm missing anything over there. I see I have a question from Ramon. Amazon at 950 at 105.39. Trying to bring up the YouTube on my other screen, and it's slowing everything down. All right, so let me read your question. You shorted Amazon at 950. 950, so it's this candle, at 105.39. Okay, yeah, this was initially off the open relatively weak compared to some of these other stocks. Like Google was absolutely ripping. I remember Apple, in the first couple of minutes, they actually bought this thing all the way up to fill the gap in Apple, which was pretty impressive. But Amazon was really weak immediately. So trying to short makes some sense versus the high of the 945 candle. Yeah, and you got this little shooting star continuation doji on a relatively weak name that kind of came in there. It was relatively strong pre-market, but it was relatively weak on that. And you got stopped out. Okay, I think that's fine. You also shorted Apple at 10 a.m. Okay. I hope you're going to tell me off this inside 5 and down, and that you did well with it. Let me read. 172.82 at 10 a.m. versus the high of the 955 bar, which is 172.89. For continuation of the downside, after it touched the 5-minute EMA and was relatively weak, I covered risk and booked profit on the way down around 172.50-ish. Okay. And I covered more at 172, and I raised my stop. I assume you mean lowered your stop because you were short. To 172.17. The previous intro. I'm trying to find that. So you're talking about later here when it really broke down at this point? Okay. And then you got stopped out of your remaining position on the bounce back. Yeah, I mean, I think it's fine. I think that you just want to be, careful. And I'm not saying that you did this. I just think you want to be careful over trading market correlated. Easy to just get pushed around by the market to overtrade, to see stuff that's not really there. But the two trades that you're talking about here specifically, I don't think that you did that. I think you identified early relative weakness in Amazon. You took a little bit of a trade for yourself. Then Apple, you had that inside 5 and down, which is a trend continuation trade that I like. So I think that's fine. I would say that maybe one flaw, if I will, is ignoring the strength in the daily chart. For me, it's almost impossible for me to short Apple. I see your trade, but the Apple daily chart just broke out on a solid earnings report a couple of days ago. Technically, there was a daily chart long setup today, but it never triggered, and I didn't like it anyway, which I talked about a bit in the morning meeting. I don't know. I really, really struggle to short Apple, and I've made this argument in the past. It doesn't mean that Apple can't go down. Apple has been buying back about $20 billion worth of. They just 2 days ago announced an additional $90 billion stock buyback. So they're going to be continuing to buy $20+ billion worth of stock. It doesn't mean that the stock can't go down. It did it in 2022. You had a sick move here from $180 to $130. I just struggle to short the strongest stock in the market after a really good earnings report, after it just broke out on the daily chart, after it just announced a $90 billion. Your trade looks just fine. So, hope that helps. From Francisco, feeling like hedge fund net short positions reflect risk similar to July 2011 S&P downgrade of treasuries. Yeah, so, one thing that I've been largely ignoring, which I guess I can talk a little bit about, is what's going on with the country right now. And, the fact that we might not raise the debt limit and pay our bills. The reason why I haven't been talking about it, and I'm sure that the market's pricing in a percentage chance that it doesn't happen, is I've seen this story before. I saw it under the Obama administration once. I think I saw it under the Trump administration once. And every single time that they end up coming down to the wire and then more or less getting a deal done. I still remember, I think it was in the beginning of 2013, the market had a massive gap up when they got like a Christmas Eve, New Year's Eve deal done to fund the government, and then the market gapped up huge. So, it's just my theory that when you're looking at these types of people, you always want to think about incentives. What's the number one incentive of a politician? The number one incentive of a politician, I don't want to get into Democrats, Republicans, anything like that. The number one incentive of a politician, more than anything else, is not necessarily to do good for the world, to do good for the country. It's to get reelected and stay in power. Well, if all these stupid politicians cause the government to start not paying its bills and defaulting on debt, and I've seen some estimates that if we don't get a deal done, that the S&P could drop 45% or some complete insanity. These guys are all out of a job, so I expect that they'll get a deal done just based on that. So I haven't really been talking about it. It is a gray swan risk that's out there right now that we should be aware of as being a thing. I just have been really under the expectation that it's going to be okay, but maybe I'm wrong. Yep, get elected. That's it. I did not go over AMD. I'm running too many things on my broken computer at the same time right now. I can't even get the chart to come up. Well, continue to come down, but I have no idea. All that matters is whether or not it meets or beats expectations on tomorrow's number, and I have no idea how it's going to happen. No idea. I couldn't tell you how the market's going to react to it. So like I was saying earlier, I think that the big thing right now is just know your key levels for the market and be prepared to react off of them. Alright, I got an AMD chart coming in. This AMD move here has been really insane. They got this thing down pretty big after Intel reported, because people were worried that Intel was starting to catch up to them a little bit, and they've just been buying it back up ever since. The information that was then denied by Microsoft, that they're working together, and then maybe turns out maybe is true. There's kind of been some back and forth on that. Has been pretty interesting, but the stock has just been stellar. The semis in general have been stellar. NVIDIA, as long as it continues to hold above, I'm trying to get that chart up and I can't get it up. NVIDIA, as long as it continues to hold above 280, looks phenomenal. And now AMD just broke this descending channel that it has on the daily chart with this big move. But it's a big 4-day move. So if you're swinging it from really good prices from previous days, great. Continue to trim and trail. Continue to get paid. As far as like initiating a new position today or tomorrow after a big 3-4 day move, I think you want to be patient and let the stock reset up. What do I think about Palantir at the open when it first recaptured $9? I mean, $9 is the key level, so you can look at it. I wasn't watching it super closely, so I don't know if you're referring all within the first 5-minute bar. Like if this is a Sebastian question. Like if it broke down 9 real quick to the downside and snapped back up, that'd be very similar to the trade I took and plugged today. So if that's what you did and you got stopped out, I support it. The better trade I think was when it actually breached through $9 at like 10 a.m. when it got tight